Hello everyone to another video for CFA Level 1. In today's video, we will be continuing our discussion on firms and market structure. In the previous video, we have done the aspects which are to be covered for perfect competition. In today's class, we will be covering aspects for monopolistic competition. Right now, monopolistic competition to a large extent is like a perfect competition, with only some variation is that the firms over here sell a bit of differentiated product because of which they can compete with each other. Also, they have some pricing power. Okay, so monopolistic competition somewhat is like perfect competition, but there is some power existing with each of the seller. Okay, so what are the discussion we are going to have in monopolistic competition? We will be having only one discussion. So monopolistic competition is a simpler discussion to have. Okay, we will be only having one discussion, that is profit maximization. Okay, we will only have one discussion of profit maximization. Okay, as you can see, but an additional benefit for you guys is that there is only marginal approach to be discussed. Only marginal approach will be discussed. There will be no total approach. No total approach discussion. There is no total approach discussion that will be happening. Okay. So we will be only discussing marginal approach of profit maximization. What is another name for profit maximization? Another name for profit maximization is producers equilibrium. Correct. Very simple topic. Again over here, the concept will be same as we have studied in perfect competition. Okay, what is the concept? Profit maximization quantity. Profit maximization quantity is decided at MR is equals to MC. So this concept is also same. The point where my MR and MC intersect each other, it is the point of profit maximization. But here some aspects change. What is the aspect which is changing? The aspect which is changing is MR. Why? See, what was happening in the perfect competition is that in perfect competition, firms were price takers, correct? Guys, firms were price takers. As a result of which, my MR line was a straight line, correct? Because firms were price taker, they had no ability to change price either downward or upward, which means it was a straight line. But this is the main aspect of monopolistic competition. Since firms have pricing power to some extent, okay, in monopolistic competition, MR is a downward sloping line. MR is a downward sloping line. Guys, a very important thing to note. This is unique to monopolistic competition. Unique to monopolistic competition as compared to perfect competition. Okay. This is the difference between a monopolistic competition and a perfect competition. Since perfect competition firms were price takers, the MR was a straight line like this. Okay, this was decided basis interaction of market demand and market supply. Correct. But over here, in case of monopolistic competition, it is influenced by the firm. It is influenced by the firm. Hence, MR in a monopolistic competition is a downward sloping curve. Guys, are we clear? Is this aspect clear to us? Okay. So till now what we have seen, MR is a downward sloping curve. But there is no change with respect to MC. MC exhibits the same behavior whether it is a perfect competition or whether it is a monopolistic competition. So it is a U-shaped upward sloping curve. Okay. Their point of intersection is my decider of producer's equilibrium. It is the decider of producer's equilibrium. So this is my producer's equilibrium. Over here, we don't have to see total approach. We don't have to see anything else. This is the producer's equilibrium or profit maximization point. This is my profit maximization point. Okay. But there is one additional aspect to it that we need to study, which you can apply in perfect competition as well. Okay. So if similar thing can come in perfect competition as well, so you don't need to complain that why it is happening. Okay. What is the additional aspect? The additional aspect is economic loss, and second, economic profit. Economic profit. Okay. So in this graph itself, you will have to identify economic losses and economic profit. How will that happen? Let us make the diagram again. MR is given as downward sloping, MC is upward sloping. Okay. Now there will be two additional aspects over here. What are the aspects? We will draw a demand curve. Guys, what is a demand curve? We all know demand curve is a downward sloping curve. We have done it in demand concept. So my demand curve will be like this. Okay. Demand curve. Okay. See, my quantity which is supplied in the market is already determined basis the interaction, which is nothing but Q star. Okay. And what is demand? What is demand curve showing? Demand curve is showing the relationship between quantity and price. So at this quantity of Q star, can we say the price that will prevail in the market is P star? What is demand curve? We all know demand curve is nothing but a relationship between demand, quantity demanded and the price. We have seen it in the demand class. Now when we have the quantity from our producer's equilibrium or from our profit maximization point, okay, suppose now we have the quantity. Applying that quantity on the demand curve, can I get the prevailing prices? So P star is nothing but the prevailing prices. This is nothing but prevailing prices. Okay, so I have got the price as well. Guys, are we clear? Are we able to understand? Guys, are we clear? Are we able to understand? So I have price, I have quantity. Can I say my total revenue is nothing but price minus price into quantity? Can I say it? Yes. Yes, I can very well say. So I have a total revenue from this graph. Okay, now the interesting aspect that we need to look into, is cost. Okay, what do we do in order to understand it better? We will draw a average total cost line. We all know average total cost line is a U-shaped cost line. Suppose this ATC1 is over here. Okay, my quantity is Q dash, so it touches the curve at point B. Okay, so can I say C1 would be my cost? Can I say C1 would be my cost? Now C1 is my cost, P star is my price. Can I say this is the region where I am losing? Why? My average cost is greater than my price. Okay, so I write total cost is nothing but average cost into quantity. Correct? Quantity is same over here. See, whatever we have discussed, quantity is same over here. So it is a comparison between price and average cost. But over here we can see that C1 is greater than price. So can we say that the region which I have shaded is the region of loss? This region is known as economic loss region. Economic loss region. So when MR and MC intersect at a point where my average total cost curve is higher than the demand curve, then we will say that we are incurring economic losses. Okay. Suppose another situation we see. What is the situation? Suppose this is my average total cost curve, ATC2. Then what do we see? My cost will be C2. My cost will be C2. Okay. My price is P. So can I say that this region which I am marking in orange is the region of profit? Why? Because C2 is less than P star. Guys, can I say this is the region of economic profit? Guys, so depending upon where my average total cost curve is lying, whether it is lying above the demand curve or whether it is lying below the demand curve, I can say that the firm on its profit maximization output, whether it will earn an economic profit and economic loss. Okay, so if a statement like this comes, that at a profit maximization point, is it compulsory that a firm will earn profit or economic profit? So if a statement comes that at the profit maximization point, at the profit maximization point, is it compulsory that the firm will earn economic profit? The answer will be no, it is not compulsory. The answer will be no, it is not compulsory. Why it is not compulsory? It is not compulsory because you can still earn economic losses if your total cost, average total cost curve is greater than your demand curve. Guys, are we clear? Is the concept clear in our head? We will read it once again so that we understand. in short run whatever we are studying. So y-axis is cost or revenue, x-axis is quantity. See, if you see, marginal revenue is a downward sloping curve, marginal cost is an upward sloping U curve. At their point of intersection, I am getting Q star. Q star is the profit maximization quantity. If my average total cost is greater than my demand curve, you see this region marked in red is my economic loss. If my average total cost is lower than my demand curve, then you see the region marked in green is my economic profit. Let us read. Equilibrium is decided at point A. What is point A? This is point A. Okay, where MR is equals to MC. Q star is determined through MR is equals to MC. Now corresponding to this Q star, the producer can charge P star. Yes. How this came? This came through my demand curve. Q star was over here. So this is my P star. So this P star was determined basis demand curve. Determined basis demand curve. Okay. Now considering the prevailing cost as ATC1, what is ATC1? ATC1 is this. We are suffering from economic losses, and if the cost is ATC2, what is ATC2? It is this. We are getting economic profits. Very clear. Okay. In long run, the concept is also similar in long run. Downward sloping MR, downward sloping demand curve, upward sloping marginal cost curve. We get the equilibrium. In long run, firms will only earn normal profits. Very important. In long run, there will be only normal profits. No concept of economic loss or profit. Economic loss or profit. You see, the graph is very logically drawn. If you look at the graph, okay, see where is ATC going from? ATC is coinciding or making a tangent with my demand curve at the point where my producer is at equilibrium. So always note, guys, in long run, ATC will neither be above or below the demand curve. It will be a tangent to the demand curve. It will be a tangent to demand curve. Okay. So all the economic profit or loss discussion that we have had is primarily for short run. In long run, ATC will always be a tangent to my demand curve. It will neither be upwards it will neither be upper to it, nor it will be below it. Okay, guys. So there is no economic profit not loss. There is only normal profit. Guys, are we clear? Okay. So with this, we complete our discussion on monopolistic competition. Okay. In the next class, we will start with oligopoly. Till then, happy studying.